And if you see that this has been missed in previous years, you may want to start looking for a new tax professional. These tax deductions here are good, common, but it also shows the difference between somebody just putting the information in the software and somebody that actually knows what they're doing to make sure that these deductions get in there.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey family, remember that disclaimer I gave you last time? Well, guess what? I'm back in the studio for episode 17 and I'm excited because we have 6 weeks until year end. And no, I'm not excited because I just can't wait till tax season, but I'm ready for a little bit of slowdown, right? Before tax season starts. Now, you may be on the other side of things. We have 6 weeks till year end and you may be thinking, oh my goodness, what can I do to lower my tax liability? So today in episode 17, we're going to look at 3 overlooked tax deductions for business owners. And you know, whenever I see people write articles about this or they do a presentation, they always choose deductions that are limited by either your income or you have to itemize. So today, what I'm going to do is share 3 overlooked tax deductions where you can make as much money as you want to. You'll still be eligible for them. The only caveat is you have to actually make money in your business. All right, so let's look at this. What can you do to reduce your tax liability? First and foremost, don't wait until 6 weeks until year end next time. All right, invest in a tax plan for 2023, which is next tax year. You don't want to wait until the last minute. You always hear me say you want to go ahead and be proactive, not reactive. But no worries, because these 3 deductions you still have time to implement before the year is over. So before I get into it, let's make sure we have a clear understanding of what a tax deduction is, because I see a lot of people get a tax deduction confused with a tax credit. First off, a tax deduction has to be both ordinary and necessary. So that yacht you want, it could possibly be a tax deduction, but is it going to be ordinary and necessary for you to run your business? That's the question you need to be asking yourself every time you're about to make a business purchase, okay? Then with a tax deduction, it's going to reduce your taxable income. So I hear people say, I spent $20,000 on this, I'm going to save $20,000 on my taxes. That's not the way it works. That's the way a credit works, which is going to save you dollar for dollar on your taxes. So let's say that you made $80,000 and you would get taxed on that $80,000, but you made that $20,000 purchase that is both ordinary and necessary. It is going to reduce the amount of money that you are taxed on. All right. So it's going to reduce what's called your AGI, your adjusted gross income. Now, I'm not going to get too deep into that today, but there is the blog post, the 15 common tax terms that all taxpayers should know. You can check that out and learn all about AGI. So my first tax deduction that I want to take a look at, and again, not restricted by income, you're not limited to only being able to use it if you itemize, is the self-employment tax deduction. All right. Now you may be thinking, I've looked at Schedule C where I put my business income and deductions. I've looked at the 1120 if you're a corporation or maybe you're a partnership and you're like, I've never seen the self-employment tax deduction. Well, that's because it's not on those forms. It's actually going to be on your 1040 on the Schedule 1. And what the self-employment tax deduction is half of the amount of your self-employment tax. Now, I say a little more than a few episodes ago, we talked about self-employment tax. It is a business owner's share of Social Security and Medicare. Both sole proprietors, and which remember, if you are a single member LLC, in the eyes of the IRS, you are a sole proprietor, and partners pay self-employment tax. Now, with that, if you were a W-2 employee, your employer is going to pay half of that Social Security and Medicare, and you pay the other half. The employer gets to write that off on their taxes. You, unfortunately, don't. So when we switch that over to self-employment tax for a sole proprietor or a partner, the IRS allows you to write off the half that was paid in place of an employer. This is why we call it the self-employment tax deduction. Now, I've been asked, well, if I'm just going to write it off, do I have to actually pay it? The answer is yes. You can't deduct something that you haven't actually paid for. So again, number one is the self-employment tax deduction. So if we're looking at your income, you're going to pay roughly 15.3% in self-employment tax. So half of that is what you're going to be able to deduct on your tax return. And if you see that this has been missed in previous years, you may want to start looking for a new tax professional, which I walk you through how to do in episode 16. These tax deductions here are good, common, but it also shows the difference between somebody just putting the information in the software and somebody that actually knows what they're doing to make sure that these deductions get in there. So for number 2, we're going to look at the self-employed health insurance deduction. Now, on Schedule C and on the other forms that I mentioned for businesses, you will see something for insurance. That is not for health insurance, with the exception of if you have health insurance for employees. The self-employed health insurance deduction is also on Schedule 1 of the 1040. You are allowed to deduct your insurance premiums paid for you, a spouse, and any children you have under the age of 27. But here's the catch. You have to actually have a profit in your business, and you have to not be eligible to be on any other insurance plan. So let's say that your spouse doesn't work in your business. They have a W-2 gig, or I should say job. They have a W-2 job, and they actually have health insurance that you're eligible to be on. If that is the case, then you cannot take the self-employed health insurance deduction. But in my experience, what I see is just because health insurance is a necessity that we need, we pay for it, and because we don't see a line item deduction for it when we are W-2 earners, we don't think about writing it off on our taxes later. I've seen families who have gotten the $16,000 plus deduction for paying for their health insurance. So again, you need to have a net profit with self-employment income. If you are a sole proprietor or a partner, you're eligible for it. Or even if you are a W-2 employee of your S Corp that you're more than a 2% shareholder for, it will show on your W-2 and it'll show if the S Corp has reimbursed you or not for that. For the nitty-gritty of it, though, I would take this to your tax professional to make sure that you qualify. Now, this one you had to know was coming. If you followed me at all on social media, then you know that I like to talk about HSAs. I will go ahead and I'll leave in the show notes some HSA articles that I've written. Now, the thing about the HSA is you do have to have a certain type of insurance plan. You have to have a high deductible health plan, okay? And again, I'm not going to go into all the details here because this episode isn't about HSAs, but I'll leave the resources so you can find out more about it. If you're an individual, and again, it does not matter how much money that you make, if you're eligible for the 2022 tax year, you can contribute $3,650. Now, if you're an individual and you're 55 years old or older, then you can contribute an additional $1,000, which is called a catch-up contribution. Now, let's say that you have a family high deductible healthcare plan. The IRS will allow you to contribute $7,300, and that will go towards the HSA deduction. Now, here's the beauty of it. What this allows you to do is pay for health expenses with tax-free money, because any contributions you're making is going to lower your taxable income. But here's the even more beautiful thing about it. If you don't use all of that money, it's actually going to roll over into the next year, and it gains interest. So as long as you use this money for health items, and there are a lot of things that are going to be HSA eligible. I will actually include another resource so you have a list of at least 77 of them, okay? You are using this tax-free money to pay for health expenses. If you don't use it, it's going to roll over to the next year, and it is going to grow, and you're not going to pay taxes on the interest. Now, who can beat that, right? Not our current tax laws. That's a pretty good deal if you ask me. So again, with the HSA, you do have to have a high deductible healthcare plan, and maybe you don't qualify for that. But are you paying for health insurance right now? Does your spouse, if you have a spouse, have insurance where you're on the plan or you're eligible to be on the plan? If not, you want to make sure that you're getting your premiums to your tax professional. If you have a profit in your business, no questions asked, you should be taking the self-employment tax deduction. This, again, is not going to be reduced by the amount of money that you make throughout the year. So I hope that these 3 tax deductions were new for you, that you learned something new. But sometimes I tell you guys that I speak taxonese because I look at this, talk about it all the time. I kind of take it for granted. Maybe that's you today, but what I would encourage you to do, if you know a business owner that has not been in business as long as you have, would you mind sharing this episode with them? Because you may know about these tax deductions, but they may blow their mind, and you'll end up helping them save a lot of money. Plus, you'll also get to help me on my mission to fill the tax literacy gap, one taxpayer at a time. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family, because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.